Ladies and gentlemen, K-Kim here. Welcome to the daily update. Hope you guys had a good day trading today. A monster bullish day today in the market. S&P 500 is up about 1.6% today. However, the star of the show today is actually the banks here. The financial sector is up 3.5%. Russell 2000 is close to up about 2%. I believe transport is also up about 2%. Let's see here. Yes, so you can see that, let me get all the indices in here so we can kind of compare all the ones that we track, right? So you can see so first of all, you can see these very, very high performing indices that you can see right here, year to date adjustment right here. This is a year to date gains, right? You can see that over there that the NASDAQ and the semiconductor is almost 40% year to date. NASDAQ 40, semi 40, right, give or take. So they've been kind of lagging even today. You can see that semi's only up about 0.3%. NASDAQ was flat yesterday when we did have a pretty bullish day yesterday. Today, NASDAQ did catch up a little bit, 1.4%. S&P is 1.6%. So the top three indices right here. And then you can see some of the laggers outperforming, especially the banks and the transport with 2.4% gain and 3.5% gain. How can we forget the day when we saw the banks went up 10% here, right? This was a couple weeks ago. And this number, the year-to-date number, was horrendous just a couple months ago. Negative 20, 25 or something like that. Banks catching up. Banks is all actually only away about 8% to new all-time highs here. So we're about 8.5% away from the all-time high level. The banks, the financial sector. At one point, the banks suffered almost 50% drawdown at one point, and we're only about 8% away to the all-time high level there. So it's a huge day today, especially on a bullish day, because again, what I talked about before, when the buyers start coming in, you see anything higher than 1.5% gain day, that's a monster day for the bulls, because you know how buyers like to make their way up inch by inch, versus bears like to just bring it down. So usually when there's like a 1% or 1.5% bearish day, it's a normal day. You gotta have more than 2-3% down day to be a bloody day, just because their characteristics and their personality are a little bit different, how they move things. So when you see about 2% gains on some of these indices, it's a monster bullish day just because they don't move like that. Remember, bulls like to take things time and they like to move slow and steadily, versus when the bears come in, having about 1 or 2% down day is a normal day. So that's what I'm trying to explain here. So anyway, let's continue with our daily update here. Let's follow up with what we've been talking about last couple weeks here, right? So looking at today's price action, this is a level we've been looking at last night. We talked about best case scenario for the bulls is gapping it up. We saw my oscillator start to make a move with that bullish divergence characteristics. We also talked about my short-term moving average starting to gain some momentum to the upside here. For the longest time, price was trading below my short-term moving average, not able to get above it this entire time last week or two. Even on Monday, big fluctuations, still closed that first hour below my short-term moving average, but something changed last 2 hours of last night's trading, where price stayed up above my short-term moving average and closed a day above it. So that pivot right here of this double bottom neckline, it was important, which we noted yesterday, right? And we wanted to see bulls making a move to the upside. Best case scenario for the bulls is gapping it up, right? And we did see that gap up. That's a decent size gap up. That's a nice size gap up. That's a sizable gap up. With that gap up, where you can see that we were able to gap back above this pivot right here, held above it, some fluctuation. Second hour, we just really pushed through. But what I want you to notice, remember we talked about this gap right here. What I want you to notice is that once this gap got filled, we didn't see any kind of retracement. Because usually what happens is when the gap gets filled, you're gonna see that vicinity acting as a resistance. And usually what you're gonna see is a little bit of upper wick. You know what I'm saying? Something like this, usually that's what happens in normal circumstances. But when you see this candle standing tall, after this gap just gotten filled, because this gap hasn't been filled for a couple of weeks here, maybe a week or so, right? And we actually stayed above it, and that candle never retraced. We never saw any kind of upper wick. And then price actually starts staying above this pivot here, prior resistance, potentially acting as a new support. That tells us that there's a whole lot more buying pressure today than any other normal day, right? That's what this second hour price action told us, that it should have seen some kind of retraction, some kind of weakness after that gap just got filled, but it stood tall pretty much all throughout the second hour. And that was that move. And then third, fourth, fifth, sixth hour, we just kind of grinded sideways, holding those gains. So overall, today's price action is extremely bullish, very, very strong, and I expect this momentum to continue. Obviously, bears can still cut this momentum down with some kind of shenanigan gap down, but any kind of little weakness in the first hour or so throughout the day ain't gonna cut it. You're gonna have to see some kind of abrupt sell-off, 1 or 2% or something like that, or a huge gap down. If not, I believe that the sentiment, because of where the sentiment is, I believe that this market could continue to march higher, right? So short-term sentiment is bullish, right? We're well above my short-term moving average. And what we can expect right now is that we did cultivate that higher high here. So you can see by closing above that 362.43, this is a higher high. And keep in mind, these lows, they're still higher lows. So in the short term, we want to give benefit of the doubt to the buyers. And you might ask, well, okay, what happens if we see a fallback? Do you guys remember? I've been analyzing this market with you since the March lows. Every time when we see the price cultivating higher lows and higher highs, right? What happens if the price actually pull back? It's pulling back many times to what? Cultivate the higher low before making new highs. So that's the setup that we're in right now. And another thing we have to understand is we may or may not see a pullback. That's the thing. But when we do see a pullback, if we do see a pullback, instead of looking that price and action as a, oh my God, this market is going to completely dismantle now. Because how many times bears been saying this? Every time there's a pullback, they've been looking for that March lows retest. We never got that in the last 7 straight months. What we've been doing, though, however, is that we've been cultivating that higher lows, higher highs, establishing that uptrend, and continuing to resume with that uptrend. And that's kind of what we talked about anyway here. When this thing fall back, we talked about how as long as we stay in this vicinity, that's still considered as a higher low, right? That's a higher low here. Those are higher lows. That means we're still in a short-term uptrend. So we want to give benefit of the doubt to the buyers in the short term. Let's zoom out here and look at the midterm here. Maybe we get a little bit better sense, what we're dealing with here in the midterm. So looking at this midterm, so now we're looking at things, longer term, which I like to call this midterm, looking at the 65-minute chart here. So as you can see here, looking at the last couple months of price action, right? So you can see right here how this market never came down, made a new lows. We actually made equal lows there. And then this market did make higher high. And when this happened, I talked to you guys that this is important. Despite the fact that we did see a pullback, right? It's not non-event. It happened. We cultivated something. You guys remember that? And this is what I talked about back in November 9th. Despite the fact that we see a big gap up and then we saw that fade, despite the fact that we saw that fade, a lot of people like to call that, oh, yeah, that never happened. It's a non-event. It is not non-event. It happened. We've cultivated what? Higher high. And we also talked about when you see that higher high, market usually pulls back to cultivate what? Higher low. We're trying to figure it out. Is that higher low is going to be right on that rising pivot, or we're going to go lower, right? And we've been talking a lot about and following that rising pivot. We talked about how important this level is because it seems that when the price retest this level, it seems to always gap back up, gap back up, gap back up, gap back up, and gap back up, and gotten back up today, right? And so we wanted to give benefit of the doubt, right? When the price is getting respected in this vicinity, and they sure have been respecting that rising pivot continuously while we're in that midterm uptrend with that higher high cultivation. Now we are breaking above this neckline here. We have that subtle higher high. Again, even though that's a subtle, it's still a cultivation. That means if we do see a price pulling back, it is pulling back to cultivate that higher low. So as of today, we want to continue to give benefit of the doubt to the buyers in the short term, mid-term, and obviously the long term here. My mid-term moving average is continuing to rise higher, right? And as long as we see that happening, you want to give overall bullish, sentiment, benefit of the doubt to bulls when we see that midterm moving average moving higher like that. Let's check out that oscillator here. So you can see we've been talking about that oscillator here. It's interesting what this oscillator has been showing us because we got these bullish divergence characteristics showing up on every pullback here. It wasn't true bullish divergence. What I mean by true bullish divergence is when you usually have a price cultivating that lower low and the oscillator prints that higher low. Instead, we actually kind of get into an equal low, right? But my oscillator cultivated that higher low, another equal low here, and then a higher low. So nonetheless, we did have that, bullish divergence characteristics than which that favors the buyers, right? So once we saw that cross here, which we've been talking about the last couple of days this week, once we saw that cross to the upside, once we saw that cross, basically what he's saying is, when this thing pulled back, it didn't pull back and made a lower low, right? Instead, it stayed in a higher low vicinity, telling us that there's a buying pressure, right? Hidden buying pressure that we cannot see in this price action. That's what this oscillator was telling us. Kind of gave us the early signal that there's kind of that hint of hidden bullish pressure that you may not able to see in the price action, and that's what the oscillator is telling us. And every single time we did see that price making a move to the upside, and it was very helpful that how the oscillators were playing out and were adjusting, right, our view on this market accordingly, right? Because I think slowly we were understanding the fact that this market was holding that rising pivot, right? Despite the fact that we saw these declines, we never turned flat out bearish, in the midterm. Maybe in the micro term to short term, even short term, we're pretty much neutral because, we were holding above this pivot. In the midterm, we're bullish, obviously. This entire time, once the price, reclaimed my midterm moving average shot higher. Ever since then, our midterm sentiment never turned bearish or even went to neutral. It was always bullish in the midterm, especially the fact that my midterm moving average was continuing to rise, continuing to move higher, right? And so what happened was, though, this was like short term and the midterm, we saw a little bit of these fluctuations. And that's what we're trying to analyze in this entire month of November, trying to figure out. So I mean, obviously day-to-day basis, we did see that micro term sentiment shifting to bullish to bearish to bullish bearish, but I think it was that short-term sentiment we pretty much stay through either neutral or neutral to bullish throughout this entire time, right? And now that price has gone back above my short-term moving average with a gap up, and I like seeing the gap because when these gaps never get filled, that's a bullish signal. I saw a comment, I don't remember if it was a Twitter or YouTube or Stock Twitch a couple days ago or last week sometime, that the market was ready to go 340, 330 because that gap must be filled. And I've said this many times this entire rally since March lows, gaps don't have to be filled, right? So just because there are gaps down here does not mean the market has come back down. Look at this gap, never got filled. 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 And the more of these, and if you can go back to March lows, and how many gaps still out there that haven't been filled, right? Just because there are gaps there, that does not mean it must be filled and the market must come back down to 340 and 330s. That's a fallacy, and that's just conjecturing, you know what I mean? You just think that it should happen, or you know what I mean, what the market should do. What we have to understand is it's not, we should never look at the market as what the market should do based on our position, but what is market doing now, right? What is the market doing now? What is the market respecting now? And then we have to adjust our views accordingly versus, I don't think the market is stable, man. I think market is going to go 300. So you ignore all of these signals that you see right now based on your fear, and then you think the market should be at 300, 320, that never comes. And that's a lot of times when what happens is your trades and you know what I mean, you go through a tough time trying to wait until the market quote unquote should be doing what you think it should be doing instead of focusing on what it is doing, what it is respecting now. These gaps are very strong because if the market is ready to come all the way back down 320, man, it has to go through all these gaps. That's going to take some tremendous selling energy, right? If this thing comes down here, feel this gap's going to act as support, come down here, feel this act as support. And because we're in a primary term uptrend and mid-term uptrend and short-term uptrend, a lot of times when the gap gets filled, it acts as support, buyers step up, and market gets to new all-time highs, and then makes new gap as it goes higher, and then you see these gaps never get filled. Anyway, this video went a little longer than I've anticipated. I'll come back for you tomorrow. Got a little bit of announcement. So because of this week, we have Thanksgiving holiday weekend, which is Thursday. I believe market is open half day on Thursday, right? Or Friday. I mean, Thursday, market closed all day due to the Thanksgiving holiday. So we'll have a last video tomorrow, Wednesday, and there will be no video Thursday or Friday. We'll resume back on the 30th November, which is Monday. So there will be no weekend video this weekend. Tomorrow night's video will be the last video for this week. Again, no video this weekend. Enjoy your evening. Good luck trading tomorrow.